Okay, so we talked a little bit about financing, margin, the costs of doing business, the spread, how the market works, the supply demand about it. Let's go now into a little bit more strategy and have a look about which markets we should be trading or which markets we can trade. Well, first of all, there are about 8,000 possible markets to trade with some of the brokers, give or take a few thousand depending on what they offer. But basically the world is your oyster. However, as traders, there are a lot of those that we just shouldn't be getting involved in, and there are some that we should. Now, I've always found the best success is when I focus my energy exclusively on one or two markets or a handful of markets, and I've traded those well. I've known how they operate, and I've really got into a feel for how they are moving. Not to say I don't keep my eye on other markets as well for opportunities, but I've found that's one of the better strategies. So in the currency sphere, you've got obviously the main currencies out there, the yen, you've got the dollar, the pound, the euro, the Australian dollar. Those are the sort of kind of the main ones. Then you've got the smaller ones that come into that. And they're called the minors or the exotics. But the major pairs to trade, or the most popular pairs to trade into with spread bears and with the traders that I know, are the US dollar yen, the pound US dollar, the euro US dollar, and the Australian US dollar. Now, there are obviously other ones as well, like the pound, yen, euro, yen, all that kind of stuff. But if you think about the main countries and then their currencies against each other, those are the most popular to trade. And also, it depends on what's in the news at the moment. When we had the Brexit scenario in the UK, obviously the pound was a big player. When we're talking more about the interest rate scenario in the US dollar comes into play. When we're talking about monetary policy in Japan, then the yen comes into play. So sometimes it pays to be able to move within your sphere of expertise. So moving on, we've got indices, the main ones that people like to trade, obviously in the UK, the FTSE 100, the DAX 30, which is in Germany, the Dow 30, which is in the US, NASDAQ 100, which is the tech, obviously, in the US, and the Nikkei 225, which is the Japanese stock exchange. My personal preference is the DAX and the Dow. I really like those two markets. I've traded those now for a good 10-12 years, if not more. So they are good markets because good volatility there. The spreads are nice and tight. They're a great day trading vehicle. And obviously there are other indices there. You've got the Australian index, you've got any other index you want, but you've got to watch a little bit, be careful about the spread. We'll talk about more of that in a second. Commodities, again, massive array of commodities. The most popular ones are going to be crude oil and gold. And then if you look at some of the others, we've got wheat, corn, soybeans in the soft commodity sector. And then we've got silver as well. This is a little bit thin silver. It probably shouldn't be included in the top popular one, really. Gold, crude oil are the top one, and wheat's the top soft commodity. So they are worth looking at. And then stocks and shares, we've got a big field of them. UK, big ones, Tesco, Vodafone, Lloyds Bank, and in the US, Apple, Facebook, Netflix, Disney, you name it, any big company in the US is traded. So we have got a good selection to trade. There's nothing stopping us trading whatever we want.